All right, good day to every one of us, and welcome back to this channel on this new presentation. And today it's 2nd February to 2025. Like I said in my previous videos, I'll be sharing my screen and my analysis on two pairs at least on weekends, maybe Saturday or Sundays. But I'll make sure I share my screen on maybe on my analysis or my bias on two pairs every weekend. So this week I want to be looking into two pairs, two tradable assets such as the Bitcoin and the GBPJPY. Why I chose these two pairs because I kind of understand the price movement in Bitcoin and GBPJPY because these are negatively correlated pairs. Like, they don't move on the same direction. And when I start sharing my screen, I'm going to explain what my bias is on BTC and what I see on GBPJPY, because if we check those who are more into cryptocurrencies, BTC, it's still on a very much ranging market. It's trading in between a weekly support and resistance level. But now, the last time I checked, BTC is trading at 1,000 at $100,000 per coin. So which means it's resting on a very strong support from the weekly time frame until it breaks down below it with a weekly candle. Then my bias on it will change. But for now, I'm still very much bullish on BTC until I see some signs of retracement to the downside, although anything could happen at any time. But when I'm going to share my screen, I'll be telling you in full detail on what I see BTC doing and what I see GBPJPY doing. So do well to stay tuned until the ending part of this presentation, and do well to share, comment, and subscribe to this channel, and let us grow together. I will be sharing my entries and my exits and my bias on any tradable assets I'm going to be analyzing. So stick to it and catch you on the next screen. All right, welcome to this screen. This is my analysis on BTC and GBPJPY. But first, like I said on the intro, I want to make sure I'm looking at these pairs, these tradable assets from the higher time frame. Then from the higher time frame, we'll scale down to the lower time frame, because the market is, there are three types of markets movement, which we all know. We have the bull market, the bear market, and the sideways market, or you can call it the choppy market if it's not trading in between support and resistance zone, which means there is a kind of a bar up and below where prices bounces off and off of, like it bounces on and off of frequently. At least most times it does 2 to 3 touches, or sometimes it exceeds more than that. So let me go to the monthly time frame. This is where I get my key levels, where I plot my key level. Not really plotting key level, this is where I see what the pair is doing. Is it going up? Is it going down? Is it trading bullish? Is it going bearish? Is it just sleepy? This is where I get my bias first on what the pair is doing at the moment. So like we see, BTC is very much bullish. There is no bearish sentiment on BTC anytime soon until price does what I think it's supposed to do, or what the market predicts. But until now, Bitcoin is still very much bullish. Yes, it's coming down to pick some bullish orders, and it's still going to spike back up. As we can see from the monthly time frame, this is a bearish monthly candle, and it's still very much coming down. Like early this morning, it was trading at $100,200 per coin, and now it's down $97,000, which means it's very much coming to a support level to pick some buy orders to the upside. So what I do on the monthly time frame is to very much come and map my obvious support and resistance level, which is here. I can see is an obvious level. If you look at it well, this happened to be a spike. Mostly if I'm supposed to drop it here, but let me not drop it here because price is no more there. I'll push it forward, although price won't be coming here anytime soon. Anything that makes price comes here means this asset is on a crashing level. So I move it to a resistance level, a strong resistance. There's a strong support. Then what do I do next is to go to my weekly time frame. My weekly time frame is where I map out my key levels, where I want to see the pair going, where I want to see price filling some orders before I get into the market or I get out of the market. On the weekly chart, I can see there is a very much minor support within these candle spikes, and this is exactly where the market might come to pick orders, just like it did the last time. It came shy of this level at the $89,000 per coin on BTC. It came here, picked some orders, and it spiked up to the upside, couldn't bridge this resistance, and it's now coming back down. So from the weekly time frame, we can see it's very much obvious that the price, in fact the market, is still very much bullish, but temporarily is still ranging in between this weekly and daily range. This is a weekly range. It's trading in between a resistance and a minor support. This is a major resistance, this is a minor support. When it breaks this point, it's coming to test this major support, probably maybe to pick orders to the upside or to crash further. But until then, we'll have to make sure you, like how I trade, I'm a swing trader. I don't scalp. I hold trades for days and sometimes weeks, but I want to make sure I'm entering at the best price. Like I said, my bias on BTC is very much bullish, but temporarily I can go bearish until I see some things. Because one mistake traders make is they try to trade against the general trend. Trading against the general trend means you're trying to reverse the market, and when you don't have the liquidity to do so, you get caught out, you get chopped out most of the time. Else let's say you're trading with a very much liquidity, which I know retail traders don't, because we are just a piece in the puzzle. You can only do that when maybe you're trading for an investment bank or you're an institutional trader that has the liquidity to move price. But for now, a retail trader who is still using MT5, who is still using your trading view, you don't have that liquidity whatsoever to move the market. All you have to do to be on the safer side is to just follow the trend religiously. Like I said, this is a weekly time frame, is showing us a kind of choppy, a kind of ranging market. Touched the resistance, came down to the minor support, and again repeated the same thing, and it's still trying to point down to this level. What I do is if I go to my daily time frame, this is where I want to see price filling some things that will tell me where to enter and where not to. My main entries are the 4-hour chart, and the 4-hour chart is pretty much where I come to enter the market. I pick my entries and I move my stop loss accordingly. Like I said, BTC is very much bullish, but as we can see clearly, this from the daily time frame tells us that this pair, this asset is ranging, is on a range here. This is a range, is trading in between a support and a resistance level. This means until now BTC is very much ranging. You can maybe be trading in between the support and resistance. Like price touched this resistance, it's now breaking down, pointing towards the support. This is the next level price is likely coming to or not, but at least it's going to come shy of this level. So what I do is, like I said, I wrote it down. I make my journals that throughout next week I'm not going to be trading. Why? Because I've not seen the market fulfill some movement that I want to pick my entries on. What I mean is, just like BTC, just like USD based pairs like USD CAD, USD CHF, Euro USD, there are things I don't understand what the market is doing. So the best thing for me is to just stay out of the market. I will stay out of the market for a week. Then from next week, I will know if I should jump into the trend or not. So for those that want to trade BTC, this is what I see. For me to trade this asset, again, there are levels I want to see. Like I said, this pair is very much bullish on a higher time frame, but temporarily on a weekly or daily time frame, you can go bullish because price is very much coming down to pick orders. Like I said, for me to go, anybody that wants to go bearish on this pair, it's advisable to let it be. But if you're an experienced trader, let's say you're a scalper or you're a day trader, you're very good at it, what I would do on my own side, if I'm to trade this asset, is to wait for price to clear off this minor support. This is a minor support inside the daily range. What I want to do is I want to see a 4-hour candle close below this support, best 2. When I see 4-hour candle close below this, what I mean is a 4-hour candle close, not a 5-minute candle, not a 10-minute candle, but a 4-hour candle close, because it takes time for a full 4-hour candle close to occur in any level. So when I see a full 4-hour candle close, then I'll know this price, this asset is coming down to 90,000 or 89,000 per coin to pick some buy orders to the upside. To pick my entry is go to the 4-hour chart. Like as we can see here, it's very clear. If we look at what price is doing here, BTC is very much crashing to the downside. So it has tested this minor support inside the daily range. So I want to see 2 4-hour candle close below. I just want to see a 4-hour candle close below this level. Then my target will be this level. My target will be at the 90k per coin. This trade could take 2 days or 3. Remember, this is a 4-hour chart. And when I enter at this price, I want my stop loss to just be above this level. So I'm risking this to get this. Do you understand? I'm risking just this to get this. Or on the flip side, like I said, I want to see what BTC is going to do next week for me to say, okay, I am ready to trade this asset. But for someone who is quick to trade, maybe some scalpers or day traders that want to trade, you can as well go bullish, because the pair is very much bullish on the monthly and the weekly time frame. But for me to go bullish, if I'm to trade this pair, I'll very much wait for price to test this minor support on a 4-hour candle close, on a 4-hour candle, and make a 4-hour candle close above this price, above the $99,000 per coin price level. Then once I see a 4-hour candle close above it, I shall be pointing towards the downside, and my stop loss will be placed just below here. Now, which means I will risk all this level to get this. This is what swing trading is all about. It's very much simple when you understand top-down analysis, multiple time frame analysis. You understand what moves the market. I use many resources. This is just technical analysis. I use the commitment of traders tool. I use the Forex factory. I use the investment.com. This is pretty much where I go to get what the banks are saying. I want to get the intake, I want to get the inputs, I want to get the prices, I want to get the units, how many thousand units the investment bank, the large speculators and the large hedgers are on a particular asset. I want to get how many units are they long, are they maybe 200,000 units long on USD JPY and 5,000 units short on USD CHF. So this is very much what I do. I will go to see commitment of traders to get some analysis, to get some insights. Then I go to, there is a site investment.com. This is where I get the news about what the banks are saying concerning a particular asset. I want to get analysis from analysts from Goldman Sachs. I want to see what analysts from UBS, JP Morgan Chase are saying concerning maybe euro, the dollar, the British pounds, the Japanese yen. I want to see what the People's Bank of China are saying concerning their currencies. So when I get all this information, I bring it down to my technical analysis. Technical analysis serves as a gatekeeping for me, but this is mostly when I'm trading currencies, when I'm trading the Forex. But when I'm trading the crypto market, I want to make sure I follow the trend. I want to make sure I see what the trend is doing from the higher time frame. Then from the higher time frame, I scale down to the lower time frame where I pick my entries such as the 4-hour chart and move my stop loss. I risk, let's say, a daily candle to make like 3, 4 to 5 daily candles ahead. I risk a daily candle close like a full daily candle, the pip count of a daily candle, I risk it to make extra 4 to 5 candles. That's why most times my trade ranges for a week, for 3 days, for 5 days, sometimes 2 weeks or a month. So this is very much how I trade. So after this Bitcoin analysis, I will go back, I will still go to another pair, which is the GBPJPY. So let's go and see what the market is doing on that asset. All right, so this is the GBPJPY. If I go down to my monthly chart, like I always do, monthly chart tells me what price action is doing at the moment. As we can see, the pair is very much bullish, right? It's very much bullish, but however, there is a kind of range, a steep range on the monthly chart, and this monthly chart shows us that the previous month was a bearish month, which was January, and we are on February 2025. We don't know yet until we see the let's say a weekly candle, or a weekly market close, or a weekly market price action levels on this pair, to be able to determine where the monthly price and the monthly analysis and the monthly price action is heading to. Do you understand what I mean? What I mean is, now today is 2nd of February 2025, and it is not visible what is happening on the daily 4-hour chart, until, like, what I do is every month I leave at least a week, the first week of that month I leave it out to see what price is doing at the moment. Is it consolidating? Is it ranging? Is it bearish or is it bullish? From this I get entries. I don't trade blindly. So going further, this is like I said, GBPJPY, and the market is very bullish. It's very much bullish. However, we have come to a very strong range from the monthly time frame. Now we don't know where the price is heading to. Is it going to go down? Is it going to go up? Maybe create a kind of double top and start crashing down. But then if I go to the weekly chart, so from the weekly chart is where I want to be mapping out my key levels. I want to make sure I get the exact key levels. I don't want everything to be left out. I want to make sure my entries, my exits are well placed in order, because the market is a very fast-paced environment where you don't want to be making mistakes. You don't want to be making wrong entries. You don't want to be on the wrong side of the trend. You just want to make sure you are following the trend. As a retail trader, you just want to make sure your analysis is on the same hand as those that has the liquidity to move the market. So like I said, from the weekly chart, what I can see is, I can see an obvious support, very strong support, and a resistance that push this price down, and this I will map out from this level. Just like my mentor does, the Apple Willis, map out from this level, clone it to this resistance, although price is not getting here anytime soon, but I will leave it there. So from the weekly charts, as we can see on the right side, the market is very much trading in between an invisible support and resistance. Now I'm going to make it to be a minor support and resistance, a minor supply and demand zone, where price is trading in between. As we can see here, it came shy of this, it bounced off. Now again, we don't know if it's going to crash further or it's going to take some orders to the upside. But until then, let me map out what is I'm going to be using as a guide to know when to enter, where to enter, and when to get out of the market. All right, here. Okay, this is nice. Like I said, from this, what I can see from the weekly chart is price is very much trading inside a minor support and resistance, out of the bigger resistance and support levels. This tells me that anything can happen here. Just as the price action came here, bounced off of it and started going up, got to this minor resistance, and it broke it, took the price down, and again it tried to go up again, and it's now like a choppy market. From the daily and the 4-hour chart, if we get there, we understand that this candle formation, this 4 daily candle formation, is a choppy market on the 4-hour chart. If I go to the daily chart, like I said, as we can see, this is a resistance, a minor resistance, and a minor support. It's pushed the price down, it got here, tested this level, made a bounce off, and it got up to this level again. It couldn't break it, it brought the price down. Just like that, it's been like a roller coaster in between these levels. So what I see price doing is very much simple. I think this pair, it's not really showing me, for me, a sign of any sign of any entry signal as of now. That's why I want to leave it for, I want to leave the first week of the new month to tell me where prices are going, where price action is taking the market to, and where these big players are moving the balls. Because the only way to stay profitable on the marketplace is to make sure you are just working in hand with the big guys. You piggyback off their ideas. Like I said, if I'm going to put this on a range, this will very much tell me what I'm going to be picking on come next week. If I go to the 4-hour chart, and like I said before, this is a range, not even a range, this is a choppy market, because now you don't know what is going to happen. It might come here, break here, test this level, bounce off, and maybe you might make a bullish trend, and again it will crash on you. The best I will do for myself is to leave this pair for now. This is my analysis on BTC, GBPJPY. For now, after this week I shall be looking for entries on the market, but for now, this first week of February, I'm staying off the market. I want to make sure I enter the best prices, and I don't get bonds on the market like a newbie, which I'm not. I shouldn't be behaving like one. So now this is my analysis on these 2 pairs. From next week, I will make sure I pick another pair to analyze next week. I think I'll analyze more of the USD based pairs or quote currencies. So do well to stick to the channel and like, comment, share, and subscribe. So see you on the intro space. Thank you and God bless. Alright, so thank you very much for sticking to the end of this presentation, and I want to let us know if you have any comments, any question to ask concerning these 2 tradable assets that I just analyzed. Do well to drop your questions in the comment section. I will do well to look at them and share my thoughts and what I see the markets doing from time to time. So you know what to do. Stick to it and subscribe to the channel, follow, share, and invite other people, because this is a new channel where I want to be sharing my experiences, my failures, my wins. Just call it my journey, because it's a new channel. I want to do it over time. Let's see how it goes, and please do well to, like I said, comment, share, and subscribe. And thank you as we wait for next week analysis. Peace out.